Guide to Audit and Compliance for Foreign Investors in Singapore. Aside from providing one of the most accessible places to set up a business for startups and foreign entrepreneurs, the transparent business and legal system of Singapore further attract multinational companies to set up their regional offices within the island country. To maintain its dynamic business environment, the government requires companies to abide by its audit and compliance laws. Companies Act, which is the chief enactment regulating the conduct of businesses in Singapore, compel companies to comply with the Inland Revenue of Singapore's and Accounting and Corporate Regulatory Agency's annual filing requirements. This video provides a helpful guide for foreign investors to better understand the audit and compliance requirements in Singapore. Determining the company's financial year-end. After incorporation, every company in the country needs to establish a fiscal year-end, which is the final day of its first fiscal year. When it comes to making a decision on an FYE, businesses should consider the effects of their selected date on their eligibility to get tax incentives. Companies' obligation for audit. The Companies Act obliges private limited companies to seek help from eligible public accountants to audit their financial records at least once every year. They are also required to fulfill the following obligations. Hold an annual general meeting. Singapore makes it mandatory for registered companies to hold annual general meetings, AGM. Companies can hold the AGM at any place around the world. It will be held in 6 months from the FY day. Appointment of auditors. Within 3 months of the company incorporation in Singapore, directors of the establishment must appoint an auditor. However, they are exempt from carrying out this duty if they fall under the following conditions. Less than 10 million SGD of annual turnover. Less than 10 million SGD of total assets. Number of employees of the company does not exceed 50. Audit exemptions for businesses. Back in July 2015, ACRA amended the Companies Act's audit exemption criteria and introduced the small company concept. This concept applies to both existing and newly incorporated private limited companies in Singapore. Companies qualify as small companies are free from the duty of appointing an auditor and have their accounts audited. Eligible small companies need to fulfill at least one of the following criteria. Have a total revenue of not exceeding 10 million SGD. The full-time employees' total number by the end of the financial year does not exceed 50. The company's total assets for the FYE does not exceed 10 million SGD. Annual filing regulations. Relevant authorities in Singapore require businesses to submit their year-end financial accounting, which includes a comprehensive statement of income, statement of cash flow, balance sheet, and changes in equity statement. Penalties for non-compliance. Companies that fail to comply with the audit requirements or those who are late in submission of financial statements are at risk of legal penalties such as fines and in worse cases, getting an arrest warrant by the ACRA.